Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Surbhi and Pavitra Parekh, and it's a flat opening for the markets yet again. The Nifty is just up close to about 22 points. The sensex higher by 60 points. Global markets too, so far at least, have not seen too much by way of direction. But the good part is, bit by bit, markets are trying to climb higher and higher. We're still in that trading band of 300 points, for the last many trading sessions now. But we are trying to move towards the upper end. It's the banks once again propelling the markets higher, the Nifty bank outperforming. And if you look at the performance of the Nifty bank versus the Nifty, you would see that outperformance. Nifty bank is up 1.6% for the week so far, while the Nifty is up 0.8%. Month to date, the Nifty bank has outperformed the Nifty by nearly 3% after a 5.5 rally. But the action is really in individual counters where there is news flow. So whether it's Crompton or Ipca Laboratories on the way down, good numbers from IFL Securities and Nelco. And look at the up move that we've seen in stocks. Zomato is higher in trade. I guess it's just a bit of a wait and watch approach because we have so much by way of news flow, global, US GDP numbers. We've got earnings from many of the tech majors globally and back home in India as well. We've got big numbers.
Oh yeah, I was looking at UBS numbers. They weren't all that great. So there's so many numbers to track, right? Whether you're looking at global or local. Earnings really is, what the major pivot for the market is. And a small example is how a lot of the financial stocks are really excited even today. And that earnings picture is playing out on all sides of the market. We're looking at numbers from, for instance, a Bajaj Finance, a couple of others, the life insurers like HDFC Life tomorrow. And in addition, we're seeing a lot of the consumer names come through. Nestle, by the way, that's a pretty good number on the volume growth that's come in. 5% is above our estimates of 3 to 4%. So earnings is where the action is, but the action also, of course, is on all the deals that we're seeing in the pharma space. And we do have Mr. Adar Poonawalla now joining in, and we have come to know that Serum has actually converted what was a loan earlier in Biocon Biologics into equity, and all put together, now Serum owns about 300 million or has invested 300 million in Biocon Biologics. Adar, thank you so much for joining in and taking this call. I think the question on everyone's mind is, what's the intent here? What does the 300 million signal? Are you looking at a bigger stake, a bigger partnership with Biocon? And if yes, on what fronts?
Nice to talk with you this morning. The $300 million at the moment is a large investment, that one of the largest investments we've made in a strategic alliance. This will amount to a 4.9% stake now because the valuation of Biocon Biologics is close to around $6 billion, as I think Kiran Shaw had mentioned recently. So, I really respect and admire the biologics business that Biocon and Biologics has built, and especially with the recent Viatris deal. So to begin with, this is what we have announced and done. I don't know, and I wouldn't comment in the future if we will increase that investment or not. I know that there are many other investors also looking at taking a stake in Biocon Biologics, and I'll leave that for them to announce as and when those deals happen. But at the moment, this is what we're doing, and we're very optimistic on this business going forward. And it's a little different to vaccines, so we thought this would be a very good strategic partnership to be able to offer our 100 million dose vaccine capacity also to them, perhaps make monoclonal and other antibody products also that they have. There are so many opportunities and possibilities with this alliance, so I'm extremely optimistic.
Just to follow up, I mean, I'm taking off from what you just said, that you do know that there are other potential parties interested in Biocon Biologics. So since you see such an opportunity, as you say, wouldn't you want to beat the others to it? Because at 4.9%, I mean, you're under 5% equity. At an sort of intent level, would you want to have more stake in Biocon Biologics?
Not at this stage. I won't comment on that. I think this deal has just happened, so we'll wait and see how they decide to take on more investors, and then we can see if I would increase my stake or not. But at the moment, this is all that we're doing, along with 100 million dose vaccine capacity that is available now. As you know, COVID vaccines, which was initially what we were going to make, and sell through Biocon Biologics, has now got a lesser demand. But we've got so many other vaccines that will now be made, in our pipeline that to utilize this capacity going forward.
Okay, so that exactly was my question. My next question, Adar. Hi, welcome to the show. This is Ekta. Just wanted to understand that COVID-19 vaccines would now be out of the strategic alliance, the 100 million doses that you all have a distribution strategic tie-up with Biocon now?
No, it is a 100 million dose capacity reservation. So we could make COVID vaccines, and look, you never say never. There's always a booster market that we're looking at. So it's not limited to COVID vaccines. It's COVID vaccines and or any other vaccines that, we want to put through in this partnership. And of course, the other vaccines will take a little bit of time, as Kiran Shaw had mentioned in her statement as well. But look, this is a 10, 15-year horizon and vision that we're looking at. It's a 15-year arrangement. So there's plenty of time, to generate some good sales, through our other vaccines. And it's not just limited to vaccines that we make. In the strategic partnership, if Biocon and Biologics have opportunities and other vaccines that they find through their network and partners that they would want us to manufacture, we can manufacture that as well. So the agreement that we have now with them covers, and is not limited to all of these sort of opportunities.
Sure. Adar, just, a follow-up with regards to that. The peak potential or a peak amount of revenue which was estimated from this tie-up in 2021 was around $400 million with margins of around 35%. Of this 100 million doses, which Biocon Biologics will have access to. How much do you think it's probably scaled down to, or do you think it stays at around $400 million in terms of peak potential revenues?
No, I don't know where you were getting this figure of $400 million. I'll tell you, the prices of these vaccines, as you know, changes with demand. Now, I can't give any predictions or statements on the, future earnings and EBITDA and all that would be there. But we've got a profit-sharing arrangement in the agreement, which shares the profits, of the vaccines that will be made. So again, depending on the vaccine, depending on the price, it'll all fluctuate, and Biocon Biologics can then later give you visibility on that. This is just the agreement which allows that to happen. So even if you look at the COVID prices, the COVID vaccine prices, they were around $2 to $3 a dose, and there was there are different profit sharing ratios and thresholds. So there was never a $400 million figure.
That's probably what was assumed by. That was probably what was assumed by the market. But Adar, I just wanted a larger question with regards to what the plans would be in the pharmaceutical space for Serum. You have this tie-up with Biocon Biologics, which will give you access to the biologics market. You do have a tie-up with Wockhardt, which is for vaccines, but nonetheless, are you at some level probably going to look to enter into the pharmaceutical market ex of vaccines as Serum?
No, I think anything we do now will be with Biocon Biologics in a strategic partnership, but I don't think we will get into making or having a separate vertical completely. So we'll wait and see how this partnership fructifies in the future, and we'll go from there.
There's just one question. Were you offered a board seat for your 4.9% stake, and would you be coming on board? Biocon?
So I was just discussing that. I do have the right for a board seat. I'm not exercising that at this moment because currently I'm preoccupied with Poonawalla FinCorp, and I've actually got a board meeting today. So yes, in the future I may exercise my right, which I do have, for me to be nominated from Serum to be on the board. And I will most probably exercise that right in the near future. Let's put it that way, but not at the moment.
Okay, Adar, Biocon Biologics is probably going to hit the markets, probably going to undergo an IPO by FY26. That's what the indicative timeline is. By then, maybe valuations could rise from the $6 billion as well. What is your larger intent with Biocon Biologics by, say, FY26? Would you want to probably exit during the IPO, hence you're just a strategic investor? Would you probably want a bigger share in the pie when it comes to Biocon Biologics? Currently, Biocon holds 71%, you hold 4.9%, Viatris holds a certain amount of stake. Any more investments that we could see, or would you probably look to exit in FY26?
No, all options are open, but I wouldn't look at an exit so soon. I believe in the long-term potential of this company. And as you said, look, $6 billion is you can call it a fair valuation, a good valuation, but I think there's a lot of upside coming in the next 2 years, on the valuation side. At least I hope so. That's why I've made the investment. I'm in this for the long term, and whether I increase my stake, whether I exit, it'll depend on the markets and the situation at that time. But I believe in this in the long term, and I think I'm going to be here, as a strategic partner and equity holder in the long term. I can't comment on whether I'll increase my stake at this stage, so we'll have to just wait and see.
Adar, just to go back to the point on the vaccine deal. Completely understand what you're saying because vaccine pricing really varies. Can you give us some visibility on, how this deal is going to be operationalized? If not immediately COVID-19 boosters, what are the other vaccines that perhaps you've discussed with Biocon Biologics? And by when can we start seeing, actual revenue from this vaccine deal?
I think in about a year's time, you should see some EBITDA and revenue coming out of the vaccine deal as well. We've got so many new vaccines in our pipeline. It'll depend it'll be up to the management to decide which vaccines we put into this and what sort of opportunities we put into the 100 million dose capacity. That's yet to be decided. I think right now everyone is just trying to build up the cap table and the investors and all of that, and then we'll have some meetings and maybe we can share with you in the next few months what vaccines and what kind of revenue will really come out of it. At the moment, we were just focusing on just getting the deal done, so we can come back to this in a few months.
Okay. What is the status with regards to your tie-up with Wockhardt? You all were planning to roll out 2 vaccines from the UK plant. Where do things stand with regards to the tie-up there?
Well, again, that tie-up was to use the Wockhardt fill finish facility that they have in the UK. And again, that was meant for COVID vaccines.
Yeah.
We will now look at maybe some other vaccines that we want to sell in Europe or the UK with them. But at the moment, there aren't many opportunities there either. So again, it's a reservation of capacity that we have got with Wockhardt over there to utilize their fill finish lines. So again, we're just reevaluating what we can do over there.
Okay, so it's not generating any kind of revenue as of now?
No, not at the moment. Not at the moment.
Okay. Just on that point, Adar, we will be joined by the management of GSK later on, and they're launching their shingles vaccine in India. And that's the big question, that what is life like post-COVID-19 for the vaccine business? For example, what is your pipeline of vaccines looking like? And there was a lull in terms of people who were actually taking vaccines during COVID-19. A lot of people missed it. A lot of people just didn't want to go through with it. Where does it stand in terms of growth? What is your pipeline of growth when it comes to vaccines and even launches?
Yeah, so I mean, that's a very good question. You know, the COVID pandemic, in a way, highlighted the power of what vaccines can do. A lot of people now know what vaccines are. People didn't even know what vaccines were before that, at least the adult population. Generally, vaccines were just given, by the mothers to their children. Adults generally don't take vaccines, but now, if you look at our pipeline also with the HPV vaccine to prevent cervical cancer in women, we've got the malaria vaccine also for the African continent. We've got so many vaccines, and now, of course, shingles is an adult vaccine that, as you mentioned, GSK will do. So the vaccine market is going to grow at least 2 or 3 times in terms of the adult vaccine market over the next 5 years. And we're very well poised, to take advantage of that with our pipeline, as I mentioned, with these 2 products and some of the other meningitis vaccines also that we hope to launch. So some of that those sales will be in India. Some of that will be, overseas. We've got a yellow fever vaccine also for travelers, going to the African continent. So we've got quite a bit in our pipeline. And I'm very optimistic on the vaccines, post-COVID as well. And even as far as COVID vaccines go, I'm sure there's going to be a booster market every year. Now, what volumes and what pricing that'll be at, it's tough to say. But I do see a small market for booster vaccines for COVID as well.
Just on that point, as we wind down the conversation, I wanted to get your take exactly on that, because there's no clear booster mandate in India on the 3rd shot. Even if you go to many hospitals, they'll simply tell you that there's no availability. Can you tell us, first of all, in terms of inventory, did you all lose a lot on excess vaccines? And what is the situation like, metro, non-metro, in terms of just the vaccine availability? Because at least here in Mumbai, I have asked, personally 2-3 places, and no one seems to be giving boosters, even if you want one.
Yes. So, it was a chicken or the egg situation where if there was no demand, there was no need for manufacturers to make vaccines. Now, I've made 5 to 6 million doses, which I'm now trying to distribute to, various private hospitals and CVCs and all these vaccination centers, so that at least when you go on the CoWIN app and you try to book an appointment, the stock availability is there. But what we're struggling with, and everyone who's made COVID vaccines in India is struggling with, is that the hospitals are very wary and or sort of scared to, purchase or order vaccine doses at the moment. We've even offered the vaccine free of charge for the hospitals to keep on a, as you sell, pay us sort of situation, pay as you go kind of scheme. And I hope that helps build up the inventory in the hospitals, because everywhere we keep hearing that people want to take a COVID booster in some cases, but the stock is not available. But that's also because the private hospitals are not willing to keep the stock, because they're afraid that, if they don't use it. There was an instance last year where hospitals also went into a bit of a loss, where they had to throw away doses. And yes, I threw away had to destroy more than 100 million doses because the expiry had passed and there were no takers. So it is a bit of a chicken or the egg situation here, and we're hoping that the private hospitals will slowly start stocking up and use this pay-as-you-go scheme that, we're not charging anything to the hospitals. We're saying you keep the stock with you, and if and when you sell it, then you pay us.
Adar, you all have restarted the manufacturing of Covishield, correct?
Just to the tune of 5 to 6 million doses. It's not much. It's just, again, as a precaution in case, again, suddenly there's an uptake, at least we have the stock. So we've done whatever we can to make the stock available and look at any opportunities that may arise as a booster demand. Look, a lot of people are a little bit fed up of taking COVID vaccines and all that, so there was that lethargy. But there is a small segment that still wants to take boosters. And what I've always said is that it's the elderly that need to take it. It's not, ages of 30, 40, 50. It's beyond 60 years of age that I would recommend that as a precaution you take a booster like Covovax, which is proven to be, for example, very good against the Omicron and its subvariants.
Okay, Aadar, just before we let you go, since we have you here, I'm just going to ask you about your plans in terms of possible listing of Serum. Is that a plan that you've probably recontemplated, gone back to the drawing board?
No. I think, at the time of the pandemic, we had looked at raising some private equity because we needed $2 billion. But then I managed that funding through other means. Of taking advances from countries and going to philanthropists to help out. But at the moment, having one listed company is more than enough with Poonawalla Fincorp, which, as you know, is doing quite well. And we even recently got a AAA rating for Poonawalla Fincorp for the long-term borrowing, from CRISIL. So I think, I'm just focusing on Poonawalla Fincorp as our listed entity at the moment in the group, and focusing on our pipeline and getting a lot of clinical trials and all that for Serum Institute underway, which will help speed up launching a lot of these vaccines.
Okay, all right, Aadar, a pleasure speaking with you. Thank you very much for answering all of those questions patiently, very helpful, and gives us plenty of insights. Thank you. Well, that's the word from Aadar Poonawalla. And to take the conversation forward, we now have with us Nithya Balasubramaniam, Director Healthcare at Sanford Bernstein. Nithya, thanks for being with us. I hope you could hear at least some of that interaction, if not all. So first things first, what do you make of it? As Aadar said, that they're at 4.9% right now. He's not saying whether he'll increase more or maybe sell out by the time there is an IPO. What do you make of this tie-up and the potential?
I cannot add color to what he's already shared on air. I think right now it seems like they will stick around with this 5% odd stake that they have. But in terms of the deal itself, the original construct, if you remember, were supposed to be selling COVID vaccines. At that point of time, the management had said that we were expecting that COVID vaccines would retail at $4 per vaccine and therefore a $400 million opportunity at a 35% EBITDA. So clearly those numbers have changed quite materially. There is no demand and the prices have also come off. And even if they were to sell other vaccines like MMR vaccines or TB vaccines, I don't think they would have been able to bulk up the 100 million demand that they originally anticipated. So therefore, I think from a Biocon perspective, I think not going ahead with the deal in the original shape and form is a good thing. Clearly, it's not worth the 15% stake that they had promised in the entity before the Viatris acquisition, right? So we had actually published earlier today what might that mean for the stock and the stock price. We think our target price actually improves slightly, right? Because if the deal is not going through, then Biocon retains a slightly higher stake in the Biocon Biologics entity. And therefore, our target price goes up from the $299 that we have to slightly higher at about $320 or so. So we think it's therefore a good thing. And I think the stock has also reacted positively today.
What is the valuation of Biocon Biologics in the SOTP of Biocon for you?
So for us, it comes to about $4.8 billion, close to 5. It's a little lower than what Aadar had mentioned earlier.
And why is that? Because he said, and even Kiran Mazumdar-Shaw spoke about a valuation of $6 billion.
So the Viatris deal, when it was struck, and they talked about offering Viatris a 13% stake, at that point of time, they had mentioned a valuation of about $7.5 to $7.7 billion. If you look at where the stock is trading today, if you back out valuation for Syngene and you back out valuation for the small molecule generics business, the market is right now willing to award them a valuation of somewhere in the zip code of $3 to $3.5 billion, right? There is obviously a huge chasm between what the management believes the valuation of BBL is and what the market is willing to give them today. Right? And that is a gap that the management needs to bridge by delivering on the numbers.
And what are the numbers that you have in store for Biocon Biologics to help bridge the gap in the perceived valuation of Biocon Biologics between the market and the management?
See, we think adalimumab is an interesting product. They're supposed to launch a biosimilar of the same in the US come July. It's obviously a substantial market. It's about $18 to $20 billion in the US. It is a competitive market. However, given the size of the market, we think it'll be a meaningful opportunity for Biocon. The second product we're looking forward to is insulin aspart. Hopefully, they will get an approval. They should be getting an approval in a couple of quarters from now. That's about an $800 million TAM, where Biocon will be the first biosimilar in the market. That's an interesting opportunity. And the third one we think that can be substantial is a biosimilar to Eylea. It's again a $6.5 billion TAM, about a 6-player market, but Biocon has been the first filer so far. So we think these three can be quite meaningful in the next 3-year time frame, right? And as these catalysts play out and we see earnings acceleration, that's when we believe the gap will start to bridge.
Right, Nithya, hi, thanks for joining us. Since we have you on, we can also ask you about the Ipca Labs acquisition of Unichem. What do you think of that? I mean, it is at a bit of a premium, but your take on the deal?
I'm sorry, I don't cover the name. My hands are tied. I won't be able to comment.
Okay, so Nithya, then let me try my luck with the new kid on the block, or the would-be new kid on the block. Mankind is coming. Have you had a look at this company? Any thoughts?
Yes, we have. We have talked about the company in multiple reports that we have published. So we think it's an attractive company. It offers you complete exposure to a fairly attractive India domestic market. We also think it gives you exposure to the faster growing OTC market as well. About 11-12% of their revenues they already make from fairly large-sized brands in the consumer health space. Mankind has done fairly well in the last several years developing leadership in quote-unquote the bottom of the pyramid. So they've done really well in smaller towns and acute therapies. And now they're trying to drive growth by moving up the pyramid, looking at metro and tier 1 towns, looking at chronic therapies. We think they've been fairly successful in diabetes, for example. They've actually jumped some 5 ranks. So it's quite impressive the kind of performance that they've been able to achieve in the last 3-4 years. And we think their expansion into cardiology also sounds promising. Nephrology sounds promising. Gynecology is another space we think that's promising. So we do see them being able to do double-digit growth through this expansion in the chronic space. And over a period of time, again, we don't think it's imminent or immediate, but over a period of time, if their expansion in chronic is successful, then you should see margin expansion as well. The valuation seems fairly reasonable. They're coming in at levels similar to Alchem. I think that leaves room on the table for investors.
Nithya, we'll leave it at that. Thank you very much for joining in and waiting by patiently as well. We'll slip into a very short break. On the other side, we go full tilt on earnings. The management of Tamil Nadu Mercantile Bank will be joining in to discuss their Q4 numbers and the way forward for next year. Welcome back. Let's get a corporate conversation going now. Tamil Nadu Mercantile Bank reported its Q4 numbers. The net interest margin has come under pressure at 4.49%, and slippages too have gone up on a sequential basis. To discuss the way forward, we're joined by the Managing Director and the CEO of the company, S. Krishnan. He's with us on the show now. Mr. Krishnan, morning. This is Rima here, and apologies for keeping you waiting. First, could you talk about the increase in your slippages? Sequentially, they've gone up from 50 crore to 70 crore. What led to that, and what would be the annualized slippage ratio going ahead? What can you guide on slippages, sir?
Okay. See, if you look into sequentially, the slippage has gone up in the sequential quarter, but not very high. I will only request that look into the slippage ratio of the bank for the year 22-23, which is just 0.82, and the credit cost with 0.40. In fact, this slippage is on account of one single account which has contributed to that. Otherwise, I do not have much of the pains. If you look into my stressed assets, that is the SMA also we could able to bring down considerably from 12% year on year to 6%. That is what I have to say. And within that 6.51% of SMA, my SMA2 is just 1.27%. So overall, if I look into the slippage, the slippage is very much under the control with a total slippage ratio of just 0.82%.
You said one account led to the high slippage. Can you quantify that account? I mean, and what was the value of that slippage?
No, well, the slippage is around 25 or 27 crores of that single account, which increased this one. And overall, if you look into it, it's not a big number.
Got it.
Okay, sir, just want to understand now, if I look at your net interest margin, it's come down a little bit quarter on quarter. Well, it's more or less stable year on year. The cost to income ratio has increased 43.14 versus it used to be 39.2 last year. Even quarter on quarter, the cost to income ratio is down, is increasing. So can you give us the rationale here? Why is the cost to income ratio going up, whereas margins sequentially are coming down? A lot of other banks are actually reporting improving margins.
Okay. Now, if you look into the net interest margin, the net interest margin year on year, if I look into, it has only improved. The net interest margin has gone to 4.46 on an annual basis from 4.1, that is an increase of 36 bips. When I come to the cost income ratio, the cost income ratio again on year has marginally come down. I can say it is flat from 4.29 to 42.29 to 42.24 on a year basis. So the net interest margin of 4.46, I feel that is good. In fact, last time when I met you and gave the guidance, I was telling that we will be maintaining a NIM of 4 plus, and we have been able to increase from 4.1 a year back, that is on March 22 to 4.46 this year.
All right, and what would you expect going forward on the net interest margins? Do you expect it to hover in this range of around 4.5%?
I will be hovering around this range, rather as a very conservative, since I say that definitely I will be maintaining 4 plus. More or less, I will be hovering around this.
Got it. Mr. Krishnan, just one question on your loan mix. You know, in Q3, when we got the figures, it looked like you're bringing the corporate book down. But now in Q4, we're seeing a 10% growth year on year. You have the 30% growth sequentially. Can you tell us what's led to that and what is the plan on the corporate book?
See, no. If you look into, the base is small, so the percentage gives a different meaning. If you look into, today I have a RAM of 87%. And the corporate and others is only just 13%, which was 89% in Q3. And in Q3, the same question came. In September, it was 87 or so. And I said that some of the corporate which got matured at the end of December, that is why it has come down. And I also said that we are open with taking up the good corporates. Accordingly, we have taken good corporates in our book, some AAA like that. So, and overall, if you look into just 13% of corporate is still, I feel that the mix may vary little.
So very quickly, did you restate your Q3 numbers in terms of margins, slippages, return ratios?
No, I saw the feet of Mr. Abhishek. I think it was basically what has happened is, let me clarify. Last time, what was given as it came in the case of NIM and ROA, if I'm right. While giving for 3 months, it was given as the cumulative for 9 months and annualized. That is how the mistake has come. I apologize for it.
Okay. Thank you, sir.
In fact, I should thank you for pointing out.
Okay. Thank you very much, sir, for clarifying that. That's Tamil Nadu Mercantile Bank. Look forward to chatting with you through the course of next quarter. We'll get into a break. On the other side, we'll discuss market technicals. Videsh Thakkar is waiting by.
Welcome back. You're with us on Trading Hour. And the headline indices, let's look at them. There's a little bit of momentum, actually, that's now built up. We're about 40 points high, not too far away from the the top levels of the day. SBI is in pole position. Let's actually pick up some of the Nifty gainers, bring the tally up for you. SBI, Bajaj Finance, Bajaj Finserv, Indices Bank. It is a financials-powered move that the market is witnessing for the time being. Well, let's take the conversation ahead with Mitesh Thakkar, who's joining in. Mitesh, thanks for being with us. So we're seeing some signs of momentum again. I think the market wants to at least take aim at 17,800. What's the call? Strategy on the index?
Yeah. Good morning, Survi. In the morning, also, I was talking about the fact that we should attempt 17,820, 825 soon, and maybe by tomorrow afternoon. I think the overall view is positive. We might see some supply over there. That's where the hourly drop was made last time we were here. But I think eventually we'll cross it and head towards 18,000. So trade with long bias, use declines to buy into index. On the stock side, I have a buy on ICICI Bank, and the banking stocks have clearly led from the front. So ICICI Bank is a buy with a stop at about levels of 900 for targets of 930. HPCL is the other buy call. Keep a stop at about levels of 243.5 and a target of around 256 can be looked at.
Okay, and thank you very much, Mitesh, for joining in. So maintaining a bullish bias, using all the dips to buy into the index, and got a few buy calls as well. Get into a break. On the other side, we'll discuss market fundamentals. Amit Gupta, VP Fund Manager at ICICI Securities, is with us on the show.
Welcome back. You're still tuned into Trading Hour here on CNBC-TV18, and let's get a conversation going on the market. We have Amit Gupta joining us. He's VP and Fund Manager at ICICI Securities. Amit, thanks a lot for joining us. This is Pavitra. You know, if we have been talking about how the market is very range-bound, how there's not much happening on an index level, but if someone is to look for opportunities that, still provide potential in this market, take us through some top holdings that you have. I know you do like SRF. That's one of the names that you mentioned to us. So take us through the rationale there. What is the kind of up move that you see on this stock as well?
Oh, yeah. So I think you rightly mentioned, so markets have been mostly range-bound. For the last 1.5 years, we are seeing this. I think the mean of the market is somewhere around 17,000. And previously the FIs were selling, but I have seen now, because the dollar is, seems to be topping out. I think some kind of FI flow is likely to be there in the emerging markets now. But it is looking at the value pockets, because we had seen this move coming into China from the month of October. And that time India was a little, richly valued. But now the Indian markets also have come down by almost 2,000 points. And we either you look at internally valuation perspective, or you look at from the relative terms perspective, the Indian markets valuations have become attractive. So our premium over the emerging markets now has declined from 105% in the month of October to now 62%. And that is where, some stock specific opportunities are definitely coming in. There are businesses which are definitely doing good on the domestic front. So for example, when I look at one of the biggest consumer theme in India, I think it is air conditioners. And we are moving towards a period where, more heat waves are likely to be there. There may be an El Nino impact. And I think that is where the companies in the cooling part, which were running at a capacity utilization of around 70%, now they have moved to 90%. And because of the ban of the government that the refrigerant gases, which used to be assembled with air conditioners, it used to happen outside. Now it is happening in India. We had seen that the market share of these refrigerant gas providers had zoomed up. Fluorine chemistry, I think, is something that we look at, because it is more reactive, very difficult to handle substance. But now we are seeing that the companies like Navin Fluorine or SRF or Gujarat Fluorochemical, which are there in this area, they are really doing good. So SRF particularly, I think a high growth component, which is also available at a relatively fine, valuations now. It has spent 1.5 years. I think the stock seems to be ready. And the earnings growth going forward in the coming quarters is likely to be much better now. And I think this is where these kind of stories are, coming up. And that is where we need to focus. Air conditioning has only 6% penetration in India. And I think the time has come when the B2B companies, the vendor companies to the main OEMs are like, because OEMs are under some kind of, competitive pressure. In the AC, we have seen that Voltas, which had a market share of 25%, it declined to 23%. The stock also declined because there was a competitive pressure from Japanese. And Daikin and Hitachi, they are also. So I think go one step back and look at the B2B players like SRF. I think that is how the money can be made.
Amit, morning. Another stock that you like and you hold in your PMS is Mahindra and Mahindra, M&M. There are concerns about growth slowing down. So the UV business, which has seen a growth of perhaps more than 50% in FY23, is likely to slow down to high single digits next year. That's what some estimates threw up because of the higher cost of emission norms, because of rural demand waning, pent-up demand also coming to an end. Would you not be a bit concerned about growth slowing down in M&M weighing on the stock?
So, see, there are 3-4 parts here. I mean, one is, the rural area, obviously it was in distress in the last 1 year. But we had not seen that kind of slowdown coming into the tractor business. We had a meeting with the Mahindra management, and we had the same discussion that when FMCG companies, they are crying out that they had the downtrading happening in their products, why the same thing is not happening with tractors. So they said that once the things are related to the business line of the farmers, that is not being impacted. And the tractor business actually is growing now. So it's a different aspect. Once you have a higher sale actually in one particular year, the next year maybe because of the base effect, it can be lower. But in terms of absolute, I think a good sales number you can see. Another, I think the passenger vehicle sales has been a record high in the last year. And we have seen close to 39 lakh vehicles being sold. Generally, how much we used to see, 32, 33, 2018, 19, I think somewhere 28, 29 lakh vehicles also we saw. And this 39 lakh vehicles were sold on the back of the unavailability of semiconductors also. So that shows that this demand is picking up really nicely. And this passenger vehicle where now SUVs have 48% market share. I think every 2 vehicles, one is SUV. So those companies which are focusing more on the SUV, I think they are going to do good. So Mahindra, I think, comes in that bucket, and they have done really well in SUVs. We have seen some kind of profit booking, I think, before the El Nino impact. The stock had declined from 1400 to 1100 something. My sense is there may be some period of time correction, but eventually the stock will grow and move towards 1800 kind of levels now in the coming months. Now, another player, I think Maruti, that we have taken in the portfolio because we believe that is also moving into SUVs. And that is going to regain the lost share now because Maruti had lost the share. It was not coming out with any major SUV. Now you have seen a couple of launches now in the recent Auto Expo. And that is where the company which has come down in relative terms in a very good valuations now. It used to be 55 times. Now it is 24 times. And I think that is where the growth will start coming in here. It may be, it has already spent a lot of time near 8,000. I think from here slowly you will see the growth.
Okay. All right. Thanks very much, Amit. We will wrap it up on that note. Good to speak with you today. Well, with that, we'll take a quick break. Market continues to build on incremental gains, 45 points up on the Nifty. Back with more in just a bit. Okay, it's a day of outsized stock price movements, and one of those is actually Zomato. And of late, we're seeing a couple of blocks also happen on the stock. It's quite excited today, up almost 6%. So what's going on? There are some notes doing the rounds as well. Let's go across to Mangalam to make sense of it. Mangalam, anything interesting that you're picking up?
Well, what's interesting about these food delivery apps is that now they're going back to their roots, which is chasing growth in whatever avenues which are available and trying to look at monetization opportunities as well. And that's what Citi has written about this morning, especially on Zomato and Swiggy, where both these companies have now opened tabs for, the dining space itself. For Zomato, there is, dining as a tab on their app. For Swiggy, the same is Dine Out. What basically users can do is book reservations or book tables in their favorite restaurants using these apps. And obviously, this could be a monetization opportunity going forward, but not yet. It is a limited rollout of this plan that the companies have done. But importantly, if the restaurants see a steady stream of visitors from these apps, then that opens the door for some sort of take rates from this itself. Apart from that, they are also giving some other services, non-food related services, booking tickets for events, etc. But all of this right now, is very nascent, but could, going forward, be important for monetization opportunities, which is why Citi, while takes note of this development, does not ascribe any valuation to it because they are awaiting some more clarity on the way this business will expand and perhaps roll out. There have been a fair amount of block trades in Zomato, which is another additional factor which is causing the stock price to move higher. But over and above everything else, Citi's target on Zomato at 76 is higher than the current market price. They've ascribed 6 rupees per share as the valuation to Blinkit, and the remaining 70 rupees goes to their other core businesses. Apart from that, remember, over the last few trading sessions, in fact, the last few weeks, we've had a couple of initiating coverages in the new age companies too. Motilal Oswal had initiated coverage on Zomato a couple of weeks back. And the overarching belief, apart from these businesses turning around, is the fact that maybe interest rates have now topped out. You don't have many more interest rate hikes going forward. So as a result of which, everyone will look at these new age companies which get better valuation in a stable interest rate environment.
Okay, got that. Mangalam, thanks very much. That's a very impressive 1 month price chart on Zomato, by the way, at a time when the market's been meandering all over the place. That's a 17% smart mover on Zomato. Guys, I mean, I really started thinking when I opened up the app and I realized you could buy gig tickets and stuff. I was like, okay, how much is Zomato going to make on this 1,500 rupee ticket? I guess we'll have to wait and watch.
Same as Book My Show, right?
I was just thinking, this is a new model. Are they trying to become a
one-stop
food
shop,
plus Book My Show of sorts? Because you've ultimately got the consumer right there. So you monetize.
And you probably have the technology as well. So I think everyone wants to be this one-stop shop for a lot of things.
Yeah.
But that's Zomato for you, up 6%. Out of time then on Trading Hour from the entire team. Thank you for watching. Stay tuned. Halftime Report is up next.